Have you ever stared at a corporate financial report and just seen a giant, confusing wall of numbers? Well, hidden inside all that data, there's usually a pretty dramatic story of struggle and sometimes of triumph. Today, we're going to crack the code, we're going to follow the money, and uncover the story of one company's pretty wild financial ride.
You see, every single financial filing has a story to tell. So our mission here is to basically act like financial detectives. We're going to sift through all the data and piece together the narrative. So let's grab our magnifying glass and dive right in.
Okay, this is what we're starting with, a raw, machine-readable data file. I know, it looks intimidating, right? It's just a wall of tags and codes and numbers, but our goal is to translate all of this, to crack this code, and really uncover the story of a company called A2Z Infra Engineering. And here's our game plan. First, we'll crack open the report. Then, we'll track the top line. That's the money coming in. After that, we'll look at the cost of doing business, where all that money goes. Then, the big reveal, the bottom line. Was it a profit or a loss? And finally, we'll dissect the different business segments to see which parts are firing on all cylinders and which ones might be holding it back.
So, let's get this investigation started. Our subject, A2Z Infra Engineering. We're going to peel back the layers of their finances to get a real, honest look at the health of their business.
Before we jump into the numbers, let's just make sure we're on the same page with a super important term, revenue. Really, the easiest way to think about it is that revenue is the company's total paycheck before any of its bills get paid. It's all the cash coming in the door from whatever it is they sell.
With that in mind, let's start by tracking that top line, which, is just another way of saying revenue. And for A2Z Infra, this is where the roller coaster ride really kicks off.
Our story starts right here, in the first quarter of 2018. The company brought in a little over 770 million Indian rupees from its main operations. Think of this number as our baseline. It's the starting point for their entire financial journey.
Now watch this. Let's fast forward just 2 quarters to the end of that same year. Whoa! Look at that jump! Revenue from operations absolutely skyrocketed to over 1.5 billion rupees. I mean, that's nearly double what they made at the start of the year. Something big was definitely going on.
This chart really puts that trend into perspective. You can see that huge leap up in 2018, but then a bit of a dip by mid-2019. This tells us this isn't some nice, steady growth. It's volatile. And you have to remember, all this income, it's only half the story. Now we need to find out where all that money went.
Which brings us to the next absolutely crucial part of our investigation, expenses. A company's salary is one thing, right? But what about its bills? We have to figure out where all that cash that was coming in is actually being spent.
And this breakdown of their expenses for the second quarter of 2019 is incredibly revealing. I mean, you've got employees' salaries, finance costs, other general expenses, but they are all totally dwarfed by that enormous blue slice of the pie.
That's right, it's the cost of materials. The overwhelming majority of their spending, we're talking nearly 1.4 billion rupees in this one quarter alone, goes to the raw materials for their engineering and construction projects. It's like the engine that just consumes all their cash.
Okay, so we've seen the money coming in, and we've seen the money going out. Now it is time for the moment of truth. When you subtract those massive expenses from their fluctuating income, what's actually left? This, my friends, is the bottom line. So let's rewind back to that first quarter of 2018. On the left, their total income was about 803 million rupees, but look over on the right, their expenses were well over $1 billion. You don't have to be a math whiz to see that the math here is pretty straightforward, and, well, it's not looking good.
And the result? A massive loss. Over 240 million rupees in the red. This is that first big stomach-churning drop on our financial roller coaster. But what happened next? Let's jump ahead to that high-revenue third quarter. Total income was almost 1.6 billion rupees, and this time, their expenses, while still really high, were actually less than their income. For the first time, we're seeing the scales tip in their favor. And there it is, a profit of over 57 million rupees. In just 2 quarters, they went from a huge loss to a solid profit. That is an incredible turnaround, and it just goes to show how quickly their fortunes can change. The roller coaster is now at the very top of the hill.
But to really truly understand this company, we need to dig a little deeper. See, a company like A2Z Infra isn't just one single business. It's made up of different parts, or what we call segments. And by looking at these different segments, we can find out which parts are thriving and which ones might be struggling.
So the report breaks the company down into three main buckets. There's engineering services, which is their core business. Then there's power generation. And finally, a kind of catch-all category they just call others.
And this little scorecard from mid-2019 makes the story crystal clear. Just look at the revenue column. Engineering services brought in 1.44 billion rupees. The other two segments? Barely 6 million combined. It's not even close. Now look at the profit column. Engineering services is the only one making any money. The other two are just bleeding cash, losing tens of millions of rupees.
So what this really means is that the entire company is basically being carried by one single division. That engineering services segment is the powerhouse, while the other parts of the business are a pretty significant drain on their resources.
And this brings our whole story together. We saw that big, significant loss at the start of 2018. That was followed by an impressive turnaround to profit later in the year. But by mid-2019, probably fueled by those underperforming segments, the company had swung right back to a loss. It really, truly is a financial roller coaster.
So what's the one thing you should take away from all this data? It's this. A2Z Infra's financial health is incredibly dynamic and really unpredictable. Its entire fate seems to be tied almost completely to the performance of its main engineering services segment, which makes the whole company's performance ride the exact same volatile waves.
And that leaves us with a final and pretty important question. When your success is this unpredictable, and it's so reliant on a single, powerful engine, how do you even begin to strategize for the long term? How do you build a stable foundation on what looks like pretty shaky ground? Well, that is the challenge that lies just beyond the numbers.